Hello, today we are solving Jan 2025 paper. Okay, Unit 2, question number 6. Seagull PLC prints and publishes books. The statement of financial position of the Seagull PLC at 31st December 2024 has been prepared in accordance with international accounting standards and it is shown below. State under which line item on the statement of financial position you would find the following. A line item does not include a heading such as current liabilities but does include an item, okay, but does include an item such as trade payables. Here we have been given the statement of financial position, so we should try to find what is the thing, okay, under what item each of this come under the financial statements. So Seagull is a company that prints and publishes books. Okay, it prints and publishes book. It has some inventory, it has some plants and equipments. Okay, it has equities and liabilities, and non-current liabilities are also there. And then you are going to have some current liabilities. Okay, so these are the things that's given. We can see that the first question is, if a copyright of a book is issued, okay, is there, where under which section will you include it? So the copyright of a book is like an asset to the company, so you are going to be including it as intangible. Okay, intangible which can't be measured in terms of money, so intangible non-current asset. So but you will include it under intangible non-current asset. Then invoice for paper paid in advance. Okay, if I pay an invoice, okay, for the paper, it is going to be other receivables. It will become other receivables. Why is it other receivables? Because I've already prepaid the expense. Okay, so prepaid the expense because it is going to print and publish the book. Probably I've already paid. Okay, I have to buy the books. I will have to buy okay, books, papers, and other things, ink. Okay, all this ink, all this are going to be the things that's going to be bought by the business. So these are the expenses. So the prepaid expense paid in advance becomes other receivables. Okay, in the statement of financial position. Then containers of ink used to produce the books. Okay, there are containers which are used to produce the books, so these could be come under the inventories. Okay, these are inventories. Then anything that was paid or expense, okay, it will become other receivables. So these two are for the current assets. Okay, and this one, copyright, is an intangible. I can't measure monetarily, so I will call it as intangible non-current asset. Then the credit entry for increase in the market value of a printing factory. So this comes under the revaluation reserve. Okay, this is a revaluation reserve because the printing is an equipment. Any asset, okay, that's going to be revalued. Okay, revaluation reserve is created whenever an asset is going to be revalued above its carrying value. So that becomes a part of equity. You should also know what is a general reserve. This reserve is going to be used. Okay, it is created when the profit when a profit is transferred here for some specific purposes, for a non-specific purpose. The non-specific purpose, okay, like it could be like purchase of machineries or paying dividends or issue of shares. I could use this money. Okay, it is transferred to the general reserves. Retained earnings is the profit that's left over before paying any dividends to the shareholders. Okay, so the retained earnings is a profit that is not distributed to the shareholders. Okay, so the from the general reserves I can issue bonus of shares. Okay, and I can also transfer it to other reserves. Revaluation reserve is only created when you revalue a non-current asset above its carrying value. Then the cash bank, and these are the things which are created when the shares are issued by the company. Share capital and share premium are different type of shares which is created when they are issued to the shareholders. Now the cash balance is this much, okay, at the ending of the December. Calculate the bank balance on 31st December 2024. Okay, so the difference between the cash balances is going to be the cash balance that's left at the beginning. Okay, at the ending it is 24,700 on 31st December. Then here we can see in the statement of financial position the cash and the cash equivalents are 373,500. So the difference, okay, let's calculate the difference. 373,500 and the cash balance, okay, is going to be equal to 24,700. So that will be equal to 348,800. Okay, so this is going to be the bank balance. Okay, this will be the bank balance. Cash balance plus the bank balance would have been written here. If the cash, the total cash and the cash equivalents balance is 373,500 and this alone represents the cash balance, then the remaining should represent the bank balance. Okay, 348,800 pounds. Then we have, okay, then we have state one example how general reserve could be used. I can use the general reserve for non-specific purposes. Okay, one example, okay, one or two examples for example are, okay, one example is it is used, okay, it is used to issue, it is used for bonus share issue. Okay, I can use it for giving a bonus share. I can use it for paying dividends. So usually dividends are being paid, okay, for transferring after transferring it to here. Okay, so other examples are, okay, these are some of the example. One example is to issue bonus shares, other example is to issue paying dividends. Okay, and you can also say I can use it for the purchase of machinery. Okay, I can use it for that purpose also, to buy something. Okay, it's for general reserve is also used for funding the growth of the company. Then interest on the bank loan is paid monthly. The interest payable for December 2024 has yet to be paid. Calculate the amount of interest owing to the bank loan. We can see that 7.8% of the bank loan is the interest that's going to be paid, right? So 7.8% of the bank loan value is 800,000. So let's calculate the yearly interest. So yearly interest is going to be 7.8. Okay, 7.8 times 800,000, that is equal to 62,400. Okay, 62,400 pounds. Now for the month of December, okay, every month they are paying, so we have to divide it monthly payment. Okay, so December monthly payment, so monthly interest due is going to be equal to this value. Okay, this value 62,400 divided by 12. Every month I have to pay, so that for the entire year this is the payment. So for per month I will have to divide it by 12, that is equal to 5,200 pounds. Okay, so this is the monthly payment for the towards the bank loan interest. Then debenture interest is paid in installments. Every 6 months it is paid. So calculate the amount of installment payment of the debenture. So let's calculate the yearly interest. Okay, yearly interest for the debenture payment, and then it is paid in two parts. So yearly interest is, so yearly interest is equal to 6.25% of 4,150,000. Okay, it is equal to 4,150,000, that is equal to 259,300 375 pounds. Okay, 375 pounds. Now it is paid every 6 months. Okay, so the amount of installment, okay, calculate the amount of one installment, for the debenture will be equal to, one installment will be this divided by 2. Okay, I'm using 2 installments to pay in the entire year because it's paid once in every 6 months, so you divide it by 2. Okay, so that is equal to 129,687.50. okay, so that is the amount that's going to be paid in 2 parts. Okay, it is paid every 6 months to complete the yearly interest payment. At the start of the year, the retained earnings had a debit balance of this much. Okay, this is the debit balance. Then there had been no entries in the retained earnings account in the year except for the profit or the loss. Calculate the profit or loss made for the year ended 31st December 2024. So the retained earnings at the end was this much. So the profit or the loss, okay, is going to be equal to the ending balance. We have to take this ending balance minus the beginning balance. So that is going to be whatever the profit or the loss that was transferred to here. So this minus 329, okay, 329,000. So this, that is equal to the beginning they had debit balance, then some profit or loss happened, and then at the ending this was the amount. So the total profit or the loss, okay, which had happened, we can subtract here. So that is equal to 538, okay, 538,000, and it is a negative balance. Okay, it is a negative balance, we can see here when we subtract. So this was the loss that was transferred. So this means it is a loss, okay, that had transferred. So the loss made for the December 2024, okay, was equal to 538. So that is equal to 538,000 million loss was made, and it was transferred to the financial statement as retained earnings. Then you have explained what is meant by the term redeemable when describing the preference shares. So preference shares are redeemable. Okay, the redeemable means, the word redeemable means the shares could be bought back by the company. Shares could be bought back by company anytime. Okay, they will buy back the you can buy back the company can buy back the shares, okay, and you can get your money like that. Then state 2 examples of the items that may be found in the statement of financial position. So that is a redeemable shares. It means it can be, the shares can be redeemed or bought back. The shares can be redeemed or the bought back by the company. Okay, that is what is the redeemable preference shares. Now next one is part 8. Okay, state 2 examples of items that may be found in the statement of financial position under the heading provisions. Okay, provisions found in the current liabilities. If I find something in the current liabilities here, okay, provisions, what does that mean? Okay, provisions might be mean, okay, what could be the current liabilities? Here I am making some provisions, okay, for the liabilities. For example, okay, there is a cost of lawsuit. Okay, lawsuit, okay, the cost of the lawsuit, okay, or the damages to be paid. Then it could be due, the provisions could also be made for the pension fund. Okay, so the provisions are made for any lawsuit or the damages to be paid, okay, for the company. And also you can also, when you are trying to pay any pension funds, you can create provisions, and that is what is okay stated here. Okay, so that could have come as a current liability which you have to pay in this year. Okay, then calculate the depreciation of the property PPE for the year ended 31st December 2024. You might wish to help you calculate the depreciation. So the table is given. So this might be used for calculating the depreciation for the year, he says. So let's see what is given here at the start. Okay, then he says that, okay, this is here. Um, at the start of the year, 1st Jan 2024, the company property, plant and equipment, the cost was 24 million, right? So 24 million was the start, okay, at the beginning. So the cost was 24 million. Then carrying value was 2.20,600 million. Okay, 20.6 million. Okay, 20.6 million you can write. Then printing purchase on 2nd January 2024, they bought a printing equipment for 2.1 million. Okay, that was expected to last for 7 years. So which means let's calculate the depreciation charge for this printing equipment. So depreciation, okay, for printing, it is going to be equal to this divided by 7, that is equal to 300,000. Okay, 300,000. So let's write it here. So let's calculate the depreciation at the start. Okay, depreciation at the start is going to be equal to 1st Jan. It is equal to this cost minus the carrying value, 24 million. Okay, 24 million minus 2,600,000. So that is 20.6 million. That is equal to 3.4 million. So that is equal to 3.4 million. Okay. Now we had calculated the depreciation for the printing equipment. So that is equal to 300,000. So let's write it here. And then you have, okay, the carrying value you have to find 2.1 million minus 300,000. So that is equal to 1.8 million. Okay, 1.8 million. So that is the that is the carrying value of this printing equipment that was purchased. The end. Then there was a property sold. So property which had a cost of 1.9 million, it was sold for, okay, sold for this thing, and the total depreciation was 500,000. So let's write it here, 500,000. Okay, this had a 500,000 depreciation. So the carrying value for this will be equal to 0.4 million. Okay, so 1.4 million. So this was sold, so you have to remove this. Okay, so we have to subtract it, all these values which was sold. Okay, you will subtract anything that was bought, you will have to add. So we'll have to remove this from the books. So that is equal to 1,400,000. So everything is going to be removed because it has been sold off. Then the revaluation reserve was created on 3rd July 2024. So let's see what is the revaluation at the ending. It was 202 million. Okay, so let's write here. So the revaluation reserve is going to be 2 million. and even here it is going to be carrying value also will be 2 million. Then we have to do the depreciation adjustments. So let's add up all this and find what is the value. Sorry, 24 million plus 2.1 minus 1.9 plus 2 million. Okay, so 26 200,000. Okay, so that was the cost. Then let's add up the carrying value at the end. So 20.6, okay, plus 1.8 minus 1.4 is going to be equal to 21 million. To get reduced here. So let's write the depreciation. Let's calculate here 3.4 plus 3 minus 5, that is equal to 3.2 million. Okay, 3.2 million. So first let's calculate the difference in the carrying value. So the difference is 26.2 minus 21 million. So 26.2 minus 21 million is equal to 5.2 million. Okay, so 200,000. Okay, for this year. Okay, the depreciation for this year. Depreciation for this year is going to be equal to this one which we have included. Okay, this 300,000. Okay, that was the equipment that was bought, plus okay this revaluation, the depreciation adjustments due to the revaluation that has happened. So the total depreciation for this year would become equal to 2.3 million. Okay, to 300,000. So this is the depreciation for this year. Okay, and this indicates the total depreciation. Okay, you can write it as negative or you can just leave it okay as a positive value. Okay, so the depreciation is 5.2 million and the depreciation this year is 2.3 million, and at the beginning it was 3.4 million. So this is the adjustments. Okay, this is the adjustment we have to do.